Now let's move on to the next adjusting journal entry that we have to take into account. If you remember in number 3, BTab purchased a van and some new equipment. And so we need to make an adjusting journal entry at the end of the year for that. Because the van, if you remember, the van, which had a cost of $50,000, was going to last 5 years, or that was the estimate, which is the same as 60 months. Okay, so if we take this $50,000 that we think the van is going to be around, we divide it by 60 months, we're going to get that we're going to have what we call a depreciation expense of $833 a month per month of depreciation expense. And what this is, again, what this is attempting to do is put the expense in the year in which it were incurred. If we're using the van in that year and it's running off or it's being used up at the rate of $833 a month, we need to record that in that year in which that depreciation expense occurred. If we took a delivery, if you remember, on October 31st, so we have how many months? October, November, December, we have 3 months. So I multiply this by 3. And so we're going to have a depreciation expense on the van of $2,500 for the 3 months for the year ending. So my adjusting journal entry number 2 is going to be depreciation expense, $2,500, and accumulated depreciation. And accumulated depreciation is an interesting account. Now, when we think about depreciation expense, we think about all of our expense accounts are sub accounts of retained earnings, because net income in a current year becomes, when it's held over, it becomes retained earnings. So earnings in the current year eventually become retained earnings. So all revenues and expense accounts are part or sub accounts of retained earnings. Accumulated depreciation is what we call a contra asset. This account is tied to the asset account in which it originated from. So when you see the van or the equipment account presented together, you will always see the accumulated depreciation account riding with it. It is a contra asset. It's not a liability. It's not something that's going to have a future. It's generally what we also refer to as a valuation account, because what it is doing is adjusting the value of the asset to reflect not the original purchase price, but the current value on the books. So let's go down to let's talk a little bit more about this with regard to the next thing we have, the next adjustment we need to make, which was on the equipment. And again, the equipment we purchased along with the van, and we purchased the equipment for $20,000, and it had a 3-year life, which is equivalent to 36 months. So if we divide the 20,000 by 36, we're going to get a rate of $556 a month in depreciation. We multiply that by the number of months we've held the equipment, the 556 times the 3, and that is 1,667. And I am rounding a bit. I'm going to round everything in this class to the dollar. So we're going to have a journal entry of depreciation expense of 1667 and accumulated depreciation of 1667. Okay, so let me show you what this is going to look like on. So on the, if I was to look at a balance sheet, we're going to step ahead a little bit, but if I was to show a balance sheet and I was going to show these items separately, I would show my, excuse me, it's not a truck, is it? It's a van. I want to show it. It's a van. I would show my van on the balance sheet of 50,000. And assets are always shown at their historical cost. I would have accumulated depreciation that rides along with this account, and that is the accumulated depreciation at year end for the van was 2,500. So we're going to show the what we call the net book value, or the assets net of depreciation, will be in this case 4750. So this is the amount that will show up on our balance sheet with respect to the van. Okay, on the with respect to the equipment, we're going to have the original purchase price of $20,000 less the accumulated depreciation of 1667. And so we're going to have a book value of, and I hope this is right, 18,3333. And this would be the net book value of the equipment. And again, sometimes it's referred to not as net book not only as net book value, but assets net of accumulated depreciation. But this is the value on our financial statements. All right, we're done with the depreciation adjustments, and we will keep moving on.